Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. And if we didn't see during the later part of the week of last week, happy new month to you, and trust you all had a wonderful weekend out there. My own name is Sheriff Daramola, and for the next 30 to 35 40 minutes, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from a technical standpoint using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for the new week. And of course, in preparation for this week, I already shared a couple of videos during the course of the weekend highlighting what my intentions are, and of course taking you through my thought process as we prepare for the new week. And so far this week, we will be monitoring three of the assets which we usually do during the Forex Morning Mastery, which includes the USDJPY, the XAUUSD, and of course the USOILSPOT. Though I'm here to share a public video on the USOILSPOT, so in that regard we will be doing a top-down analysis on this asset real time here during the Forex Morning Mastery. So I encourage you to exercise patience and of course stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. So grab your favorite beverages, your biscuit, whatever it is you want to hold on to through the course of the session, and stay tuned in. Now, for those of you who are joining us for the first time, first of all, I'm excited to have you around with us this morning. And if you're wondering what we do here, what is it that we do on the Forex Morning Mastery? Well, first of all, we usually share a couple of videos during the weekend, which is our plans for this week. So I always emphasize that you watch this video prior to the Forex Morning Mastery so you can have a background knowledge of what we are talking about in this community, as we will only be deliberating on the 1 hour time frame, which happens to be our execution time frame. So if you do want to have an idea into how we were able to identify those key levels we will be using on the chart, the patterns and the structures we say we will be using to guide our trading decisions, then I encourage you to watch my weekend videos. If in any way you missed out on these videos, the links are right in the description box of this current video you are watching right now, so you can check it out after the live session. So following the videos during the course of the weekend, the Forex Morning Mastery was born out of the necessity to do follow-up details on these particular assets on a daily basis. So as a result of this understanding, we gather here every day, coming together to do follow-ups and reviews of the assets on our watch list for this week. So we come here to manage the existing trade, see how we close any trade if necessary, or how we are going to be adding more position if the case is necessary. And my aim here in this community is very important for you to understand, is that I am here to help you with understanding, helping you in understanding price action analysis, and at the same time finesse your skills in this analysis. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather in this community to enhance your own trading decisions and strategies independently. So on this note, I welcome you all on board once again, and in fact encourage you to actively engage in the comment section. I see your comment, Adeni Babalola. Good morning to you, Adeni Babalola. Trust you're doing very well, and I do hope you had a wonderful weekend out there. And thank you very much for the wishes. All right, so I guess with that being said, here we shall be diving right into the business. And I also want to emphasize here that I know it could be tough sometimes when we trade the financial market. It could be really, really tough because trading the financial market is more or less of a psychological thing, and managing our emotions, I know, is an Herculean task, and of course it exhausts a lot of energy while you try to manage your emotions. And one of the simplest way I have adopted to ensure that we can easily manage this is by having a plan before taking any trade. So when you have a plan, you have your plans mapped out, it's quite easy for you to manage your emotions during the course of the trade. So this is why the Forex Morning Mastery is born, so that we can come here, analyze the market, and of course have a detailed plan to guide whatever decisions we are going to be making, irrespective of what the market does in real time. So once again, I welcome you on board, and with that being said, let's dive right into the business. And as usual, the first thing we normally do in this community every morning when we come here is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And of course, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, right here on the economic calendar for this week, and of course based on the assets we are monitoring for this week, we will be focusing on the economic features from both the United States and the Japanese economic docket. Now, for this week, we really do not have any major. We don't have a week list with high impactful event. Let me put it that way. As if you watch my weekend videos, you realize that we only have two high impactful events, which is coming in from the United States. Now, to help us in strategically positioning ourselves for the next move, and most importantly the timing, it's very pertinent that we also keep tabs with the mid-tier economic features, which could also give some impetus into the market too as well. And as a result of this, I was able to include the mid-tier economic features from both economic docket to guide our trading decisions for today, and of course give us a better timing to position ourselves for the next move. Now, the first high impactful event for today is coming. I'm not sure of this one. It's the Fed chairman speech, which I'm not sure if it has already happened because the time here says 12 a.m. GMT +1, but I'm not sure if this has happened, because if it has, I should have gotten some highlight or update on my financial feeds, which is yet to come up. So probably the event has not, the timing has not been fixed, but of course majority in the market will be looking forward to the Fed chairman speech, which will definitely be providing us with an insight into the bank's monetary policy stance, economic outlook, and potential future policy actions. Now, the anticipation of this speech can significantly impact market sentiment, as traders and investors will definitely closely analyze the rhetorics for clues about the future policy directions. And you all know how we have been the market has been kept in a suspense and uncertainty throughout the last 3 weeks. As you all know, last year we had this anticipation that there is likely going to be an interest rate cut as early as the month of March due to the inflationary pressure in the United States dropping. But surprisingly this year, the United States keep churning out robust economic data week in, week out, which further has thrown a clog in the wheel of the expectations of a rate cut anytime soon. And from what the Fed chair said during the FOMC policy meeting, press conference, last week, he emphasized that the inflation rate is still very, very high, and that it is not likely that we will be having any rate cut as early as the month of March, and this potentially increases the chances for a longer period of monetary policy tightening to stay in the United States. And of course, this is going to be giving some beautiful and positive traction in favor of the dollar. Now the question is, when will it happen and how will it happen is what we are doing in the market today. Then another impactful event that we are looking forward to today, which we will be taking into consideration, is the ISM Services PMI, which is also considered to be a key economic indicator that measures the performance and expectations of the services sector in the United States. Now, a higher than expected data typically signals economic expansion, of course, boosting market sentiment, while a lower than expected reading may indicate contraction and of course potentially dampen investors' confidence in the economy. Now, if we look at the ISM Services PMI data for the month of December, it came in at 50.6. Now, the ISM Services PMI, the way it is gauged, it has a range between 0 to 100, and anything above 50 is considered to be a positive and expanding sector, and anything below 50 is considered as negative. And if we look at the previous data here, it says 50.6, which is okay, at least averagely okay, above 50, about 0.6 above 50. Now, based on what is on ground and what economies are seeing coming out from the United States, market participants are projecting 52, which is a whopping figure compared to the previous data. Now, with this in mind, it shows that there is an expansion in that sector. So we will be waiting to see what the actual data is going to be. Will it be just as expected, below expectations, or even beyond expectations? But one thing we do understand as technical traders is that the anticipation of this event usually has a way it influences the market sentiment, and of course the sentiment in the market will reflect to us as traders on the chart as price action. So what we are doing today, we will be looking at the chart to sniff through the current market structure, looking out for patterns and structures that we can actually use to position ourselves for the next move. Then, besides the ISM Services PMI, there are a couple of speeches coming up later today as well. We have the Goldsby speech, which is coming up in about 7 hours from now. Goldsby is the President and Chief Executive Officer of the 7th District Federal Reserve Bank of Chicago. And of course, whatever is going to be saying today will definitely be one market participant will be scrutinizing his rhetorics and statements, and of course remarks, to understand what the monetary policy of the Fed is going to be like in the long term. Then we also have Raphael W. Bostic, who is an economist, and of course is serving as a voting member of the Federal Open Market Committee, that's FOMC. So whatever he says today will also carry some weight in giving us an insight into what the monetary policy outlook of the United States will be. So these are very high important speeches that we will be looking forward to today. So these are the most impactful events that we'll focus on for today. So let's record the timing, the time these events are happening, as it will help us to time ourselves in such a way that we can capitalize on the next move. So with that being said, here we will be diving right into the business. I just opened this chart earlier. Okay, fine, good. Before I go into the details, let me say hello to everyone. I see your comments, Sahid. Good morning to you, Sahid. Trust you had a wonderful weekend. And okay, no problem. We're going to be taking on gold. You know, it's my favorite asset, and we will be treating it. It will be the last one we'll be treating. So I hope you stay tuned in so you don't miss out on that one. Jonah Aruna, good morning to you. Glad to have you around with us this morning too as well. And trust you had a wonderful weekend. So with that being said, let's dive right into the business. Okay, so the first asset we will be taking on today is going to be the USOILSPOT. And like I said earlier, I didn't do any video on the USOILSPOT during the weekend. So with that being said, we will be scaling up into the daily time frame. Let's have an holistic perspective into what is going on in this particular market. And in fact, there has been a lot of factors behind the scenes that has been driving this market sentiment. I will tell you a simple secret. I'm surprised last week that oil prices dropped significantly, and though we took advantage of that opportunity as price nosedive to the downside. That is why I usually don't rely on my emotions and instinct most of the time, but instead try to understand how participants in the market are actually thinking, which of course can be revealed to us by understanding the way price action is moving. Now, despite the fact that there has been geopolitical tensions in the Middle East, which of course usually should incite concerns about oil disruption, we saw how price dropped to the downside. Though we could say, okay, fine, because of the API data and the EIA data that came in last week showing huge increase in stockpile in the United States. Of course, whenever we have an increase in stockpile, this is a sign that the supply is higher than the demand, and when supply is higher than demand, price will definitely drop and crash to the downside. But I still think that the tension in the Middle East, it's what is stabilizing this market, not allowing prices to drop further south significantly. Now, besides the geopolitical tensions in the Middle East, we remember on Saturday we had about the joint military operation by the United States and the United Kingdom attacking new airstrikes on the Iran-backed Houthi militants in Yemen, which of course was a retaliation to the attack on the U.S. base in Syria, killing three soldiers, and of course 17 soldiers were injured during the course, and it was a successful attack. And this further incites the idea that the tension in the Middle East is still there and may continue to stay. Then looking ahead, we learned that the OPEC Plus had a meeting that was last week, Wednesday, I think it was on the 1st of May, and I still think that the OPEC Plus are still struggling to try to see how they can cut oil supply so that they can artificially increase the price of oil. But as it is right now, I think they have to face challenges in the form of particularly the United States, which could potentially supply their supply cuts, leading to oversupply in the global market, and this could lead to price crashing further to the downside, which is of course the aim of the United States. Now, this dynamic has had some element of uncertainty to the future trajectory of crude oil prices, and within this uncertain environment, we have no other choice than to exercise patience and mark out structures on our chart that we will be using to guide our trading decisions. So with that being said, let's look at things from an holistic standpoint. Now, scaling up into the daily time frame, well, we have a structure which we have been using since the beginning of this year, which actually projected a reversal setup earlier, but unfortunately for buyers, we can see some limiting factor that is not allowing price to grow to the upside. Now, with the situation we have right here, this is what I was able to come up with after considering the nature of price action since the month of September. That's an historical data of about 5 to 6 months. And if you look at the structure closely, it's quite clear that the market has been on a strong bearish momentum. Now, after connecting the series of lower highs, in fact, I have a couple of descending trend line here. One is this one right here, which has been supporting the bearish momentum. And I have the second one right here, which is the one I think we will be focusing on for this week, the one that goes right into this structure that we have here. So let me take this one out as we will be focusing on this one. Now, besides the fact that price has been bearish since September last year, you will see that since the beginning of the month of December, we saw our price, despite the strong bearish momentum, as soon as price got into that area around the $68 and $72 area, we saw buy pressure resume around that point. And as a result of this, I did have a demand zone identified around that area, as we have seen that every attempt by the sellers to break through the zone has been met with strong resistance from the buyers. Now, to help us guide our trading decisions for this week, we have a key level situated at the $72 area. And if you look at the structure closely, you will see how it has played a major role in determining direction of price action in the last 4 months. Now, in the last 4 months, we've seen how that area has supported buyers at every point in time. When price comes into that area, we saw buyers push price further to the upside. So it means that market participants are still seeing the price of oil cheap at around that $72 and $68 area. Now, how do we intend to position ourselves for the next move this week, especially considering the strong bearish momentum in the last 1 week? Now, price action closed around that $72 area last week right here, as you will see. And one thing you would notice prior to the closing at that area is that I think 3 weeks ago, we saw price break out of the trend line, first of all. Then we saw price, from a technical standpoint, we expect that price may come back to retest the structure in an attempt to continue the uptrend. Now, price is back into the structure, as you will see right here. Now, what we want to see is, will price retest the structure in an attempt to continue the uptrend? And this will only be confirmed if we can see a reversal pattern around that area, maybe in the form of a double bottom structure, head and shoulder pattern, falling wedge, whichever case it may be, to allow us to capitalize on the uptrend continuation. However, if price drops below that descending trend line, then we are likely going to be back into seller's territory, though that area is still a demand zone area. But if we continue to see selling pressure, this will welcome an opportunity for us to sell this asset. So with this information we have gathered here, you would agree with me that we are at a crucial juncture in this market. So it's very necessary for us to exercise patience and look out for critical patterns that will help us to guide our next trading decision. So with that being said, we will be scaling down into a much more lower time frame, where we want to see how market participants will be reacting to the structure since the beginning of this week. Now, scaling down into the 1 hour time frame, this is what I think let's scale to the 4 hours time frame first of all. I think I have a structure there. Now, on the 4 hours time frame, after considering the nature of price action since the month of December of last year, you will see that price has been finding higher lows. Now, the series of higher lows, when connected, gives us this ascending trend line, as you will see right here. Now, this is the descending trend that was broken and appeared to be retested last week. You can see how they both share a beautiful confluence here. Now, price is back at the ascending trend line, And the question we are trying to answer now is, will price respect the ascending trend line one more time to push price to the upside, or will we get this ascending trend line broken for the first time in about 8 weeks to incite a sell-off to the downside? We are at a crucial juncture in this market where anything that happens here will determine where price will be going in the next couple of weeks. Now, scaling down into the 1 hour time frame, we begin to see things more clearly, and I was able to identify a simple structure right here on the 1 hour time frame. Now let me zoom in so that we can see things very clearly. Now, looking at the 1 hour time frame, first of all, remember our key level situated at the $72 area still remains very much intact, and you know how we use our key levels in this community. As long as price remains above the key level, we have no business selling, as we want to be looking out for patterns and structures that support the idea of buying that asset. Now, since the new week has begun, we saw how price action has been trading above that ascending trend line. Remember, this is the ascending trend line right here, and then we saw price confined within a range that is between the $72.78 level and the $72.20 area to emphasize the prevailing uncertainty in this particular market. And you know how we use our ranges in this community. When price falls into a range like this, we have no other choice than to exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, looking at the structure closely, if price breaks down the support line of this range, price would also have broken down the ascending trend line we spotted on the 4 hours time frame, giving us a beautiful sign that sellers may likely be taking over this market. But I wouldn't want to be jumping into conclusions due to the key level we have at the $72 area, which of course has been a strong memory for buying power. We saw what happened around that key level during the course of Friday's trading session, where every attempt by the sellers to break through was always met with strong resistance from the buyers. Now, for me to sell, I would like to see price take out that key level at the $72 area to incite an opportunity to join the downtrend scenario. Now, if price breaks down the $72.20 level, which happens to be our support line for that range, I would like to see a retest of structure happen, giving me a good confirmation. Then I can join the bearish move and then have a sell stop order below the $72 area to capitalize on that uptrend. So these are technical expectations we expect to join a bearish move to the downside. However, if you have been profitable on the US oil probably the last 1 month, and then you can afford to risk some of the profits to test what is around that area, then you can easily place a sell stop order below that structure, and let's see if it's going to work. If it doesn't work, then we know we are only risking some of the profit we've made so far in the last 4 to 5 weeks. So that is how we expect to guide our trading decisions on this one. So we're expecting selling opportunities only if this ascending trend line, the $72.20 level, and of course the $72 area is broken to the downside. And we are not going to be buying unless the resistance line of this range is broken to the upside. So this is how we are going to be managing our position on the US oil spot for today. So I do encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart. All right. I see your comments, Philip A and Ryan Rito. Good morning to you guys. Trust you guys had a wonderful weekend, and thank you for checking in. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we should just move on to the next asset on our watch list. And please don't forget to give the video a thumbs up. Your likes are very, very valuable to me, and in fact, this is the only and cheapest way you can support this channel to grow. Your likes support helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. Thank you very much. As you do so, please click on that like button, and let's move on to the next asset. So the next asset on our watch list is going to be the USDJPY. On the USDJPY so far this year, we've had a positive portfolio on this asset. Remember, we stopped trading this asset about 4 to 5 months ago due to the uncertainty surrounding the timing of the intervention of the Bank of Japan in the forex market. And because of the uncertainty back then in the month of October, we decided to drop the USDJPY from our watch list, including the GBP USD, which we traded till the end of last year. I think we traded the GBP USD at the beginning of this year, and I saw a very interesting setup on the USDJPY during our first session. I think the second week of this year, and we decided to capitalize on that bullish momentum, which gave us a significant amount of profit. I think we scooped in over 800 pips on the USDJPY a couple of weeks ago. Now, since last week, in the last couple of weeks, we have seen price action go into a consolidation phase, which further emphasized the prevailing uncertainty in this particular market. And during the course of the weekend, I shared a top-down analysis on this particular asset and what I think is going to be happening this week. Now, let me quickly reiterate again for those who are joining us for the first time. If you had not watched my weekend video on this asset, please go ahead and watch that video, as we're only going to be deliberating on the 1 hour time frame here, which is our execution time frame. So if you want to have a background knowledge of how we got to this point, check out my weekend videos. The links are right in the description box of this current video you are watching. Now, with that being said, this morning, for those of you who are with me on my TradingView and Telegram platform, you will be familiar with this setup already, as I did give an insight into what I think is happening. At this point, we see the USDJPY is currently struggling to recover after hitting a new year-to-date low at the 148.825, and throughout the Asian session, we saw how price action has been trying to gain some traction. The Japanese yen has been trying to gain some traction, resulting into price action confined within a range around our key level. Of course, our key level for this week is at the 148.500 area. We are depending on how market participants react to this key level will determine how we will be positioning ourselves for the next move. So currently, price action is ranging within the 148.825 and the 148.275 area to emphasize the prevailing uncertainty in this market. And you know how we do it in this community. Whenever price falls into a range like this, we have no other choice than to exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, there are various factors behind the scenes which is affecting this asset. Well, we talked about this a couple of weeks ago, the hawkish remark by the Bank of Japan governor, which of course emphasized how the inflationary pressure in the Japanese economy is gradually reducing, and this could incite the possibility of pivoting from their current ultra loose monetary policy as early as the month of March/April. That is his own word, as I put it. Now, because of these, buyers of the safe haven Japanese yen have a glimmer of hope that maybe it is high time we start buying the Japanese yen. Though we saw some traction in the last couple of weeks, but it failed due to the resilient US economy, which of course has been churning out positive data week in, week out. Now, other factors that could support the yen to rise, that is USDJPY dropping. So when the yen is rising, we expect the US dollar to drop, right? So other factors that will support the idea of the Japanese yen, of buying the Japanese yen, are the geopolitical tensions in the Middle East. Those are one, arising from conflicts between Gaza and Israel, and of course the United States and the Houthi rebels in the Red Sea area. And then we also have concerns, worries about slowing growth in China, though the Chinese government plan to inject 1 trillion Chinese yuan into the government, though we are yet to know if this injection has been established. But at the moment, economic data from the Chinese economy hasn't been very rosy in the last couple of weeks. So these are factors that can actually help the yen to grow. And if the yen is going to grow this week, then definitely a breakdown of the 148.275 should be what we look out for to sell. On the other hand, the increasing belief that the Federal Reserve will maintain higher interest for an extended period of time continues to underpin a potential uptick in the US Treasury bond yield, which of course is directly proportional to the US dollar. So consequently, it is essential to exercise caution ahead of the release of the US ISM Services PMI, which is coming up later today, to further give us fresh impetus into let me say short-term trading opportunities on this particular asset. So for us to position ourselves for today using our technical structures, we already have it identified on our chart. So all we just need to do is exercise patience and allow the structure to mature. And for those of you who watch my video on the USDJPY this weekend, you realize that in the last 2.5-3 weeks now, price action has been confined within a 220 range on the higher time frame, and right now price is oscillating around the resistance line of that range, which happens to be our key level. And if price continues to stay above our key level, definitely we want to be looking out for buying opportunities. So as a result of this, we have a buy stop order sitting above the 148.825 to capitalize on an uptrend continuation, and our stop losses definitely should have enough room to give price action to breathe. So below the key level seems most appropriate, so we should be having between 30 to 45 pips depending on your entry point. Now, in as much as we expect price to continue to the upside, considering the uptrend situation in this market, remember this market has been finding higher highs and higher lows since this new year began. So I'm of the opinion that a breakout of the resistance line will welcome buying opportunities. But in as much as we're looking out for buying opportunities here, we cannot ignore the potentials that we could witness some profit-taking activities from this area that could incite a retracement to the downside. It could be a short-term one before we may now decide if it's going to be a massive sell-off to the downside. So in that regard, a breakdown of the support line of the 148.275 will welcome selling opportunities for us, and maybe we could see price drop into the support line of that range we identified at the 148.350, which will be dovetailing to a minimum of 200 pips to catch on that one. So let's see how the market will play out here. So it's a simple setup we have at this juncture. as our center of focus is basically between the 148.825 and the 148.275 area, where depending on the direction of the breakout will give us an idea into where price may likely go, at least for the first half of this week. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions. So this is my simple view on the USDJPY. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see and wait if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I want to assume that we are all on the same page, and I do hope you've marked out those levels on your chart. Very, very important, as we will be needing them to guide our trading decisions for today. So with that being said, let's move right into the last asset on our watch list for today. So the next asset on our watch list, and of course the final one on our watch list for this week, I hope Saeed is still around, is my favorite asset, of course, the XAUUSD, popularly known as the gold spot. And in fact, this morning we have quite an interesting situation going on in the market right now, as we finally see price action break down both the ascending trend line we did identify in our weekend video on the XAUUSD, and of course the key level at a $2,035 area to establish a bearish start to the new week. And of course, this bearish momentum has been influenced by a shift in the market sentiment, with market participants now dialing down their expectations for a more aggressive Federal Reserve policy, is in light of the stronger than expected NFP data that came in on Friday. And coupled with this is the recent US Treasury bond yield, which has been growing significantly, and we all know how the US Treasury bond yield is directly proportional, that is, the value of the US Treasury bond yield is directly proportional to the US dollar. If the US dollar rises, if the Treasury bond yield rises, the US dollar will definitely follow suit, and if the US Treasury bond drops, then the dollar will drop to as well. And this could be a significant factor undermining the appeal for safe haven assets such as the gold. However, in as much as the strength of the US dollar is robust at this point in time, we cannot ignore the other factors too that may support the ascent of the XAUUSD, and one of which we have been talking about for a while now is the geopolitical tensions in the Middle East, which currently is still ongoing, and there is no sign of a relent on this on the perspective in that region. Then furthermore, the ongoing concerns about the sluggish economic growth in China is also going to be a determining factor that will support the gold. Now, as a result of these, it's very, very important we remain cautious and use our structures to guide our decisions. Remember, our structure gives us an insight into how the market participants are thinking, and of course give us an idea on how we want to be strategically positioning ourselves for the next move. Now, as market participants are eagerly awaiting the release of the US ISM Services PMI, which of course gives us an insight into the health situation of the services sector of the United States today, participants will be seeking cues from this data, at least to give us short-term trading opportunities. So on the XAUUSD, we need to note this, that whatever opportunity we see right now today or during the course of the week is a short-term one, because the market is imbalanced right now. We have various factors, driving factors that is affecting the current market conditions. So with that being said, we have a structure this morning that I did identify. For those of you who are with me on both my TradingView and Telegram platform, you must have seen this, as we saw price action since the week began, though has been trading around our key level at the 2035 area. But while trading around that level, we see price confined within the 2042 and the $2027 area for the first 8 hours of the week, before we finally saw price trigger our first sell position for the week at the breakdown of the $2027 area. I do hope you capitalize on this one. Let's hope that price excuse me, let's hope that price will continue to the downside in that regard. And please, while you take advantage of this bearish momentum, let's ensure we have enough breathing space for our stop loss. In fact, I would like the stop loss to capture somewhere around above the key level or around that ascending trend line that was broken. That will be dovetailing to about 80 to 100 pips depending on where your entry point is. Now remember something here, for those of you who watch my weekend video, remember we talked about this ascending trend line, which could play a major role in guiding our trading decisions for this week. So we saw price close around that ascending trend line during our weekend videos, and we talked about this, that if price finds buy pressure above the ascending trend line, we will continue to look out for buying opportunity above that structure. But as it is, price just broke down the structure. I missed the breakdown of the 2035. For those who did capitalize on that one, well done and kudos to you. If you had capitalized on this 2035 level, please just kindly move your stop losses, secure that current position while we wait to see how the market will continue from here. I personally missed out on that because it was in the midnight in this part of the world when that transaction happened. So, but it's okay. As the beginning of the week, we still have enough time to take advantage of this market. So let's be on standby to capitalize on more opportunities. And based on the structure I identified here, I'm also still considering the possibility of price action coming back to retest the structure. It's still a possibility, so don't let's forget about this, don't let's neglect this idea. So if price comes back into that structure, I would like to take some more advantage of that position at the site of selling pressure, or if possible a reversal pattern in the form of a double top head and shoulder or even a falling wedge around this area to join the decline to the downside. So this is how we are going to be managing this trade on the XAUUSD. So as it is, the current structure is looking very bearish. Like I said at the beginning, price just broke out of the ascending trend line, broke down our key level, and these two factors here support the idea of selling. You know how we do it in this community. When price action breaks down our key level to the downside and our ascending trend line to the downside, we want to be looking out for patterns and structures that supports the idea of selling. So as it is right now, we want to maintain a bearish bias in this market, and the only condition that will make us to buy this asset is for price to climb back above that ascending trend line. If price does not stay above the ascending trend line, we are not going to be considering buying this asset today. So to give a visual representation of what I'm talking about here, the only condition that will make us buy this asset is for price to climb back above this ascending trend line and in fact break out of the $2,042 area. Then we can start considering buying this asset. So I will keep you posted in the comment section of both my trading view and Telegram platform as it is. And I have the link to the XAUUSD live window right in the comment section of this video, and it is pinned at the top of the comment section. So you want to be clicking on that link, click on the notify me button, and as soon as we get online, you will get notified as soon as we do so. And for those of you who are joining us for the first time who do not know what the XAUUSD live window is all about, well, XAUUSD live window was a platform that was born out of popular demand from members of this community, where we come together to monitor real-time price action on the XAUUSD. So you see how we take advantage of positions, how we manage our existing positions, and how we of course take advantage of interesting positions through the course of the session. So it usually lasts between 5 to 7 hours of the New York session. It starts about 5 to 10 minutes into the New York session and goes through for about 5 to 7 hours depending on the volatility or the trading activity on that day. So I look forward to seeing you guys right in the XAUUSD live window. And thank you guys for those of you who had liked this video so far. I have over 18 people on board right now, and we have about 9 likes. Please guys, where are the remaining 8 or so? Please give this video a thumbs up. Your likes are very valuable to me, and this is the cheapest way you can actually support this channel to grow. And of course, your likes, the more likes we have, the better the algorithm will push the video to a wider audience of traders who may find this content beneficial, and at the same time subscribe and make the community to grow. Thank you very much guys for your likes. I really do appreciate it. So with that being said, here I think we have come to the end of the Forex Morning Mastery. But before I round off, let me take some 10 to 15 seconds off to see if there are any questions whatsoever as regards to what we talked about today before we go ahead to round off on today's session. All right, so in the absence of no questions, we have finally come to the end of the first edition of the Forex Morning Mastery for the week, and it has been a wonderful moment with you guys. I really appreciate your likes, your support so far. Thank you very, very much. And so far we were able to attend to 3 of the assets on our watch list, which includes the USOILSPOT, where I did a top-down analysis on this particular asset and what we will be doing to guide our trading decisions for today. We talked about the USDJPY, and of course, finally, we talked about the XAUUSD, where we were all able to identify simple trading setup using our basic and fundamental tools such as trend lines, key levels, and chart patterns only to identify potential trading opportunity and of course strategically position ourselves for the next move. So I do hope you marked out those levels as illustrated during the course of the session, and if you did, thumbs up to you. Well done. And all we want to do right now is exercise patience and allow the structure to mature, and then we jump into the positions. And always remember that every decision we make in the financial market is more or less an educated guess, and until price action hits your TP target, of course. And with this understanding in mind, you want to be having a well-defined risk management strategy in place to mitigate against any pullback that may happen against us if price doesn't go our way. So with that being said, here we have come to the end of the session, and for those of you who are joining for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well this asset have been doing and at the same time prepare for tomorrow's trading session. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.